in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast, Tax Moves with Glen Birnbaum. This edition of the Moving Iron Podcast is brought to you by Dawsontire and your premier ag tire and mill provider in North America. Also, Tractor Zoom, delivering insights. Glenn, how you doing today, bud?
Hey, doing okay, Casey.
Good deal. Glenn is a CPA with Heindel Banhart in East Peoria, Illinois, and it's very odd here. We got a twofer here this week with the tax moves, and we were talking about earlier this week. We put that out that there was some clarifications coming down the pipe, and there was some kind of a little bit of fuzziness there on what was going to go on with some possible delays with some first quarter reporting estimates, as well as maybe what's happening with your overall April 15th tax deadline. So, Glenn, you had some stuff pop up, and there's a little bit more clarification about that.
Yeah, Casey. So, we talked earlier this week on Monday, so now it's about 5:30 Central on Wednesday, and we got this notice 2020-17 that came out from the Treasury that kind of spells out more specifically what they're offering to do here. So, it's basically that if we have payments due on April 15th, so if you have a refund, you probably should file, right, and get your money back. But if you have a balance due or a payment due on April 15th, you have until July 15th to make that payment. Okay. So again, the idea is to so people can keep their money a little longer. So again, that's the balance due on the 2019 return. So, and then the thing we were kind of speculating about on Monday was, will this also apply to your first quarter 2020 tax estimate that is due the same time, April 15th, 2020. And the news there is, yes, that also will get pushed off to July 15th. So basically any federal income tax payment, which includes your self-employment tax for people that are, self-employed, any federal income tax payment that's due April 15th, you have an extra 90 days, roughly July 15th. Okay. So that was good news. What was very clear in the notice is that you do not get an automatic extension of time to file your return. So you still would have to file an extension or file the return by April 15th. Okay.
Okay.
Now, that's causing some issues because, do you still have to come into the office, meet with your tax person? What about some of these tax services that are done, right, for low-income people or the elderly? Like, how are they actually going to file an extension? And so there's some discussion on Twitter, and I'm not an attorney, but some people on Twitter are talking about, is this really like statutorily correct? What is the code section when we talk about a disaster, or is it an emergency or a disaster? Which one is it? And maybe, because you've delayed the payments, you also automatically delay the return. This will be left to attorneys to hash out. And my understanding is, again, based on a tweet somebody else put out there, that there's some discussion happening right now. But the intent of Treasury is to still file everything, but maybe we're going to get an automatic extension, but who knows? The biggest thing from an economic standpoint is these payments that were due April 15th, you can defer those up to July 15th with no interest or penalty charge whatsoever. So it keeps a little more money in your pocket is the idea.
Yeah. So there's been all kinds of stuff floating around. I don't know what you've heard, and I've tried to find some stuff about it, but I can't really see anything out there. But Steve Mnuchin's been talking about a lot of different things up there, anywhere from a payroll suspension of payroll tax deductions to every American gets $1,000 to, and there's all this stuff floating around. Anything out there that you've heard of from the IRS that might be coming on the pipe like that?
I mean, nothing official. I've just read some articles here recently. Again, it's Wednesday now. I think it's going to be based on, and maybe we forget about this, but in 2008, there were payments sent out. I believe it was like maybe $600, and then it was based on, how many children you might have had. I think it might have been $300 a child or something. And so they're talking about trying to get this money out. I believe April 6th is the first date, or at least starting the payments on April 6th. And that would be possibly just based on your direct deposit, if you already have direct deposit information, right, with your tax return. But would they use, the interesting part, Casey, would they use your 2018 tax return? Because, that's some people haven't filed their 2019 tax return, right? So, direct deposit, do you use 2018? What if you change your bank account? But the idea being that they would try to use the IRS's resources to pay this money out. But the IRS is pretty busy right now, right, with other things. So if they've got to go take money out, but what I've heard is April 6th, and also I think May 18th was going to be the next payment. But, the logistics of doing that. So it seems like they're kind of backing off the payroll tax idea because that requires, tax forms to be changed and stuff. And they're trying to just send a check out directly. But again, this article, I can't remember where I saw it, mentions that the IRS doesn't really have the ability to write a bunch of checks anymore. They can't, do you have enough check stock to print off a bunch of checks? So that's what we've heard. Yeah, April 6th and May 18th, I believe. But I don't. But the IRS is already, they're obviously busy with other things, and so for them to have to write these checks would be a challenge.
That's several checks they'd have to write.
Yeah, or do the direct deposit stuff. All those numbers, right? It's all zeros and ones, and got to make sure it's all right. But what if you moved, or what if you changed bank accounts, right? It's because we're in the middle here, right? I think the last time this was done in 2008, we were past the filing season, I think. And so, it was just a little more clean. So,
yep. So this stuff that we've talked about here, these different filing extensions and those kind of things, what's that do to some of the stuff that's already been kind of up in the air anyway, like the finalization of the 199A stuff and all those kind of things? Yep. How does that play into all that?
Well, it's a great question. What I've seen here just recently is, and we've talked about this, the 163J, which is the interest expense limitation. Guess what? If you got a lot of debt and you got a lot of interest, you might be in some trouble, right? So, are we going to, Casey, you still there?
I'm still here, bud.
Oh, sorry. I don't know. Something just flashed on my screen there. So maybe we can cut this out. Okay. So are we going to, have to change the rules for these people that have a lot of debt, right? If companies have a lot of debt, have a lot of interest, now more interest is going to be non-deductible. When their income goes down, then they're not going to be able to deduct as much of the interest. So it's kind of like a double penalty. So, these would all have to be, passed via law, but there's some question about that. There was also a rule about net operating losses, which some people may remember that you can no longer maybe carry back a net operating loss back into prior years, although farmers had an exception to that. But farmers used to be able to carry back 5 years. Then they changed it to 2, but most other taxpayers, you can't carry it back at all. So will they change these rules? Because now if you're going to have some big loss in 2020, right, you would like to be able to carry that back and get some tax back that you might have paid in 2019 or 2018, if you follow me. So, if you want to give relief to these companies that are losing money in 2020, you might have to change some of the laws. But that all requires, going through the normal process. So it does, cause people to wonder if we need to change the rules that we just passed a couple of years ago.
So one other question I had for you when we decided we were going to talk today, a couple of things that popped up. So GM and Ford have dropped or canceled production for the next couple of weeks, right? They've stopped production of anything for the next couple of weeks to the end of March. And there's going to be some lost time there that they're going to be able to claim as a loss and those kind of things. And I'm sure there'll be some clarification that comes down on what that looks like and how that works. But is there some kind of hardship thing that you can throw out? Because all these businesses that are having to close down and losses they're going to incur on their taxes and those kind of things. I mean, how does that work?
Well, I don't know that I have all the answers, but there is a bill, I think it was just passed by the Senate today, that deals with like some paid leave, sick leave, emergency leave kind of stuff that my understanding is it's applicable to companies with under 500 employees. You've got to pay certain amounts, but then you're going to get some tax credits back. But if you're over 500 employees, I'm not sure what happens like the big companies like Ford. One thing I did mention is this deferral, hey, April 15th to July 15th, that's if I owe less than $1 million. So if my first quarter estimate, which is a big number, obviously. So if my first quarter estimate and my balance due is over $1 million, then you'd have to pay pay that amount. So it's $1 million for individuals, and then it's $10 million for C corporation. So that would be like your Ford or those people, if they've got a payment due, which C corporations generally have payments due April 15th. If it's over 10 million, they'd have to pay it. No. If it's under 10 million, they wouldn't. But yeah, how this all works with the paid leave and unemployment, and that's that it gets real tricky. But the Senate just passed a bill to try to address some of that.
So I'm sure that the bill that they're passing is going to have this language in there. But as it sits today, how do you reflect that on your taxes now? If I'm is it income? Is it not income? How does that get taxed?
Well, it's a good question. I'm not sure I know. If you're just saying, do you, federal income tax is generally not deductible. So if it's just going to be a credit, basically you're saying, is this subject to taxable income as well? Right. I'm not sure. I haven't read through the law, but
yeah,
good question.
Yeah, there's a ton of stuff up in the air, a lot of stuff coming down, and it could come at a better time, right? So, you're in your tax season, you got other stuff to worry about, and man, all kinds of things happen. So, all right, Glenn, good stuff as usual. A lot of good information here. Twitter is blowing up on the tax Twitter side of stuff. Yep. If folks want to reach out to you, ask you some questions about what's going on, or just get some overall guidance on a few other things, what's the best way to do that?
Yeah, it's best just to call our office here at Heinold Banworks. It's 309-694-4251, or, look me up on Twitter at Glen Birnbaum is my handle.
Right on. All right. Well, Glen Birnbaum, it's great to talk with you again, man. And the first time I ever had a twofer, I think. This is the first time here. So
I'd have to do it on Fridays.
Yeah, right on. So Glenn again is with Heinold Banworks. Make sure you reach out to him on Twitter and check out what's going on there. I'm Casey Seymour with Moving Iron Podcast. Be sure to follow me on Facebook, Twitter, and Instagram for all the latest episodes of Moving Iron Podcast. Also check out movingironllc.com for everything Moving Iron related. Check out the Global Ag Network as well and the great podcasters there. So until next time, I'm Casey Seymour with Glen Birnbaum. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.